Folks, right now we're looking at the Dow down 202 points. I told you that this could be a kind of a rocky hour. So what we're going to do is we're going to go commercial free from this moment on as we count down tick by tick to the close. Who knows what's going to happen here? The NASDAQ is lower by 161 points, the S&P down 31. And yes, we are seeing the VIX climb a bit higher at the moment. It's now up 9.5%. Some of this has to do with the fact that, yes, the president took aim at Apple once again and Tim Cook. Apple is the worst performer on the Dow Jones Industrials. It's on track for its 8th down session, and just week to date, it has lost nearly 8%. But could it go as low? Right now, it's 195, but could it go as low as $141 as these tariff headwinds come at the company? Let's ask the man who's put that street low price target on the stock, Moffettnathanson Research co-founder and senior analyst Craig Moffett. He's got a sell on the stock since the beginning of the year. Craig, what would drive Apple 27% lower from this point? I mean, is it the Trump tariffs enough to do that?
Hi, Liz. Well, look, there's a bunch of things that the Trump tariffs are the most proximate risk, but they're not the only risk. But you step back a little bit, and what have we seen so far? Right? We've really only seen the multiple come in a little bit. We haven't seen estimates cut yet. And my best guess is as we start to see estimates come in to reflect the tariffs and to reflect some of the other risks in the business, not least the risk posed to Apple from the potential judgment in the Google antitrust case, where remember Apple gets 20% of its operating income from Google in payments that a judge has already said are illegal. That when you see that adjudicated and show up in estimates as well as in the multiple, you're likely to see the stock continue to come down. So, and that's before we start to talk about any of the kind of fundamental issues that Apple is having with AI. So the news today is all about tariffs, but it's just one of a laundry list of headwinds, unfortunately.
Yeah, because it's been since the start of the year that you've had that sell call on it. And a lot of missiles coming at Tim Cook. This one, the latest. I mean, what must he do, and what are his options here? Because, listen, he told Donald Trump that Apple will invest something like $500 billion in the U.S. over the next 5 years. That has not calmed or mollified the president.
That's right. Look, but the market sees this as a negotiation. And if the market really believed that Apple is going to have to be paying 25% tariffs on all of its phones, the stock would be down a lot more than 2% today, or 2.5% today.
3% right now, 3%.
But it would be down a lot more than that if you really thought that tariffs of that size were going to hit all iPhones, and therefore you would have either you pass them through to consumers and you have the demand destruction that comes with higher prices, or alternatively you don't and you have the margin destruction that comes with eating them yourself. Either way, that's not a good outcome. So the market is assuming that this is a negotiation. The challenge is whatever that negotiation looks like, it's going to mean substantially higher cost. I do think that most people acknowledge, and I presume the administration fully would acknowledge as well, even though they won't say so publicly, that it's simply not realistic to think that Apple can move all production to the United States. They have, by most estimates, 3 million people in the supply chain in China, and those people are paid generally less than $5 an hour. Trying to say you're going to either fully automate that or, even worse, try to bring it to the U.S. at U.S. labor rates is just not a realistic expectation. So the question is, what can you do to mollify the administration? Is it bring the production of additional key components? They already get the glass here from Corning, Gorilla Glass. Are there other components, for example, that you could make here that would be sufficient for the administration to say, good enough, let's take these tariffs off? But whatever that is, it's going to mean incremental cost. And it's not just the cost of doing business at U.S. labor rates or anywhere else's labor rates, for that matter, other than China. It's also that China now has a 20-year head start in all the different technologies, training of engineers, tooling and equipment, and that sort of thing, that you can't simply say, I'm going to rip that out and move it somewhere else. That's
Right.
just not a realistic expectation.
Yeah, you brought up the suppliers, Glassworks, which of course is Corning. They make the Gorilla Glass. They're down about 0.5%. The Apple suppliers all in the red at the moment. That would include Qorvo and Micron, Analog Devices, Taiwan Semi, Skyworks. So as we continue to watch this, really quick, you said AI is also a problem. They're lagging behind. Johnny Ive, who basically designed the iPod and was sort of that chief creative guy when it came to working with Steve Jobs back in the day. He just struck a deal with OpenAI to create a new AI device. And that doesn't help, does it? I mean, could that be an iPhone killer, whatever this device is?
Well, we don't know, but step back, Liz, and I think there is a really interesting narrative here that your audience ought to keep in mind, and that is, if you look back over the last 10 years, each of the big five, Google, Amazon, Apple, Microsoft, Meta, had a pretty well-defined silo, and they were able to stay in their own lanes, and each of them succeeded beyond any reasonable expectation with just spectacular decades. If you look out at the next 10 years, because of AI, it really looks increasingly like all of them are going to have to be competing with each other. And now it doesn't mean that that's a catastrophe, but generally speaking, when you have these really large companies competing for the same opportunities, you're going to have some margin compression, and it's going to put pressure on probably all of them. But Apple right now is behind, and they are admittedly far behind in AI. And there are these existential risks, like the Johnny Ive risk, that says maybe the next big device is not a phone. And if it's not a phone, does Apple really have an advantage in something that is no longer screen-based and is really audio, and it could be glasses, like what Meta and Google are doing, or it could be simply an audio device that communicates via speaking to it in a way that suddenly very different playing field.
Listen, right now Apple's down just about 3%, and the rest of the market is going down, including the Dow Jones Industrials down 245 points. Great to see you, Craig. Thank you very much for coming.